Hello and welcome to the return of the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. For the Reserve Bank of New Zealand, 2025 was the type of year the late Queen Elizabeth II might have described as an annus horribilis. It ended with a new governor in place. She is Anna Breman, the first woman and the first non-New Zealander to hold the role. Pledging transparency, accountability and clear communication when she was announced in the role last September, Breman, who was previously Deputy Governor at the Swedish Central Bank, joined the Reserve Bank in December. Anna Breman is, in fact, our guest for this episode. So Anna, firstly, welcome to the Of Interest podcast. It's great to have you with us.
Thank you so much for having me.
And look, we're speaking just a few hours after Statistics New Zealand released its December quarter Consumers Price Index, which, of course, the CPI is what the Reserve Bank uses for its 1 to 3% inflation targeting. So we all watch this very closely, including you and all your colleagues at the RBNZ. So obviously the December quarter CPI came in at 3.1%, which, as you know better than anybody, is slightly above your target of 1 to 3%. So I guess the first question really has to be about this. And I mean, how concerned are you that the CPI is above 3%, given, of course, that the RBNZ itself was forecasting 2.7%?
So it is higher than our latest forecast. And we are determined to ensure that inflation falls back to the midpoint of our target range, which is 2%. We are carefully looking through all the data. It's clear that there's some items in there that typically are very volatile. They can change a lot between different quarters. But of course, 3.1% is high. And it means that inflation that's been hurting households for many years is still above where we want it to be. But the outlook is still favorable in terms of inflation going forward. So it's also important to stress that we will focus on getting inflation back in the target band and towards the midpoint of the target band.
So you think the outlook is still favourable. It's interesting that financial markets are actually pricing in Reserve Bank increases to the official cash rate, with the first one as soon as September this year. Do you think they're getting ahead of themselves?
I think that usually I don't comment directly on market pricing. I think the important thing is that now when we have these inflation numbers, we will analyze this data very carefully, and we will also look into all other kinds of data that we have that we know is important for inflation going forward. So we will look into the growth numbers. We're going to look into the labor market. We have more information on the labor market coming out in early February. And then we will take all of this together to see what it means for the New Zealand economy and for inflationary pressures going forward. So I stay very calm and vigilant to make sure we have a good forecast and good monetary policy going forward.
Okay. Now, I mean, obviously this year in New Zealand, as you'll be well aware, is an election year. So there's always quite a bit of sensitivity around changes to the official cash rate during an election year. I'm interested in some of the economists' notes following the CPI today. They're bringing forward their expectations for OCR increases. And one of them, BNZ's head of research, Stephen Toplis, is actually now suggesting September, which is in line with that financial market pricing that I mentioned. I mean, I guess, central bank independence has been a big topic already this year, and we'll get onto that a bit more. But, I mean, if the RBNZ believes that increasing the official cash rate is necessary, are you comfortable doing that in the run-up to an election?
We are statutory independent. We are an independent central bank, like you point out, and we will do what is best for the New Zealand economy and to reach our inflation target.
And in terms of some of the areas today where we see some quite high inflation, I mean, we're looking at things like the electricity or power prices, obviously household power costs, local government rates and charges, tertiary education costs, and I think it was health premiums were really strong. These are sort of interesting areas, I think, for monetary policy. So I'm interested in asking you about how much influence can Reserve Bank monetary policy have in areas like that, and what are the limits of what Reserve Bank monetary policy can achieve?
So you're right that there are a lot of things in here that are necessities. So there are things that households really care about that they have to buy that has increased a lot in price over the past year. In this latest outcomes, electricity was one of them. There's still high administrative prices. Food increased not the last quarter, but over the past year, food prices have increased a lot. The Reserve Bank and the policy rate affects demand of the economy overall. We don't target any specific price group, but it is a complex situation when there are items that households have to buy, so they really feel the squeeze from those price increases, and it means that they might not. They have to cut back on other things. We actually saw retail sales being rather weak in December, so we take that into consideration. But our goal is still the overall price level. But we realize that it's particularly hard on households when necessities increase a lot in price.
There's a saying that's sometimes used in New Zealand that monetary policy needs mates. It needs help from government fiscal policy and other areas. Are there any, what would be your message, I guess, to, it is an election year, obviously, to the politicians, both central and local ones, in terms of what can they do to help the Reserve Bank keep inflation under control, keeping in mind, of course, as you're well aware, that we've just come through a really high inflationary period?
Well, I think that keeping inflation low and stable, it's really our task to do that. So I'm not going to give recommendations to anyone because they have their parameters and that's how they operate. But we are firmly committed to bringing inflation back within the target band and towards the midpoint of that target band. I just wanted to stress that I do know that it is extra complicated for households when they see that the necessities like electricity, food, fuel prices are increasing.
Obviously, we've sort of already touched on it, but the subject of central bank independence from politicians has been in the news this year. And obviously, along with a series of other central bank governors, you signed a letter in support of the US Federal Reserve and its chairman, Jerome Powell, who's been under, I guess, fire from President Donald Trump and the US Department of Justice, with Powell talking about the Fed's setting of interest rates based on evidence and economic conditions being under threat from political pressure and intimidation. So strong words. Now, obviously, after you signed that letter, Foreign Minister Winston Peters was critical, saying that the Reserve Bank has no role and shouldn't involve itself in US domestic politics, and the governor should, as he put it, stay in her New Zealand lane and stick to domestic monetary policy. We also heard from Finance Minister Nicola Willis, who said you should have consulted with the Ministry of Foreign Affairs first and also let her know you were going to sign the letter. And then in contrast, Labour leader Chris Hipkins said he had no problem with the letter, which reflected the position the New Zealand government should actually be taking. So I just wonder, of the three of them, which one is right?
So can I give you a little bit of background? So this is a particular situation. So I was in a BIS meeting between 1 and 3 a.m. And BIS is the Bank of International Settlements. So central bank governors meet, and BIS is kind of the reserve bank of the reserve banks. And this statement was discussed, and there was a sense of urgency if we were to sign. And I made the decision on behalf of the Reserve Bank to sign the letter, and my arguments. The way I was thinking is that we are an independent central bank and we're supporting central bank independence. Central bank independence was very clearly explained in the letter, why it's so important to reach price stability. And it was also very carefully crafted. So it had sentence talking about the importance of independence, but also saying with full respect for the rule of law and democratic accountability. The Federal Reserve is important for the global economy, and many countries, all our peers were signing this, including the general manager and the chair of the BIS, and we're shareholders in the BIS. So I made that decision. And if it had been 3 p.m. in the afternoon, I would have called to seek advice on this. It was particular because it was that time of the day. So I have called both the finance minister and the foreign minister, and I have said that I agree with them, and it was never my intention for this to be foreign policy. So I completely agree that foreign policy for the government, not for us, and that was not at all the intention. I said that I apologize for not seeking their advice. They didn't ask for an apology, but I think that it is reasonable to seek advice. Then, of course, if I had that discussion, I don't want to speculate on what I would have done in that case. But I do agree with them that it would have been reasonable to seek advice. Now I know that even if it's 3 a.m. in the morning, I can call them.
Right. So they can be expecting some 3 a.m. phone calls?
Well, I hope that the global economy will not require that. But we know that we live in a very complex global environment. So it's good to know that I can call them for advice, but it's also, we made it very clear and had good discussions with them. And I fully agree, we're an independent central bank. Our focus is monetary policy, price stability. We need that independence to deliver on that mandate. But I fully agree that we don't do foreign policy. And that was never the intention, never my intention.
Did you get any advance warning that Winston Peters was going to criticise what you did?
Also, good question. I got some information that he might comment, something like that. But we're busy. We have busy working days, so I don't even know if I had that information before the information was out.
Okay. Mm-hmm. This issue of central bank independence, though, as you say, it is a very important issue, and obviously Donald Trump is going to be appointing a new Fed chairman soon to succeed Powell, who, of course, he's criticised for not lowering interest rates as fast as he would like. I'm just wondering, how concerned are you about the Fed becoming, completely politicised or even weaponised by the Trump administration?
Well, Federal Reserve is important for the global economy. We know that, for the stability of the global economy. They have people with very high integrity, and we're closely following the developments, of course.
And given there are clear risks around the Fed becoming less independent after Trump's new pick for chairman, is the Reserve Bank, along with other central banks, you talked about the Bank for International Settlements in the meeting, are you and they, taking any steps to make sure liquidity isn't at risk, or that, is there any concern about US financial repression from a more authoritarian sort of regime there now?
I think the important thing here is that we always have preparedness. We live in a complex environment. It can be other things that happens around the world. So we always have preparedness in case we get signs of financial stability in any part of the system. So I think that's really the key here, that we have preparedness, we focus on our mandate, and we ensure that we can deliver on the statutory mandates that we have within this country.
And in the global financial crisis and also during the COVID pandemic, the Reserve Bank received US dollar swap line access from the Federal Reserve. I guess, would you be confident that if that type of thing was required in the future, that it would still be forthcoming?
Well, there's been some changes lately where the Federal Reserve introduced a new instrument, and I don't remember the name by heart now, but there is a way that we can post treasuries that we have in the currency reserve and swap that for US dollars, and that's a facility. That's called a facility, and that's available.
One of the issues this week, of course, here in New Zealand has been some extreme weather here in the Upper North Island in particular, with very heavy rainfall, and tragically we're seeing some loss of life from that. From a Reserve Bank perspective, the Reserve Bank has been, I don't know if outspoken is the right word, but the Reserve Bank's had quite a lot to say about climate risks and climate change issues and its potential impact on monetary policy and financial stability in recent years, and some people have criticised it for that. I'm just curious as to your perspective in terms of how influential a factor you expect climate change to be in the Reserve Bank's formation of monetary policy and financial stability oversight during your tenure at the Reserve Bank.
Yeah, well, what you just mentioned is this horrible events that unfolded over the past few days. And I have to say that, my heart really goes out to everyone who are concerned for their loved ones and are being affected by this, because it's horrific. And the rescue workers working so hard right now. It's very tragic events, and I really feel with them. Your question, trying to come into sort of that part of that question, our mandate is low and stable inflation. We know there's research on this, that extreme weather events can have an impact. It tends to be volatility. It can temporarily increase food prices or something else being affected by the extreme weather events. Output can be affected and cause more volatility as well. So, we have to do the analysis to see whether this is the case when countries are affected by extreme weather events, to maintain our focus on price stability. Then there's also the question of risks. So there has been some work done in terms that's related to financial stability. And these are things that are analysis that's very much within our mandate. We don't have the tools to fight climate change. That's a completely different thing. But doing research and analysis and how it affects the things that are within our mandate, price stability, financial stability, that's reasonable, but we don't have the tools to fight climate change. That's important to understand. That's for governments.
In terms of obviously your background, and at the Risk Bank, I probably pronounced that wrong. Apologies.
It's a very strange word, It's very old.
Yes.
The Central Bank of Sweden is almost easier. Yes.
Yes. Well, I'll stick to that then. But given in Sweden you have the same model as Australia, which is probably more familiar to most people in New Zealand, with a central bank and a prudential regulator that looks after financial stability or oversees financial stability. I'm just curious to ask about your, experience and confidence in stepping up to the Reserve Bank's financial stability role here, given obviously the Reserve Bank of New Zealand does both monetary policy and financial stability oversight.
Yeah, I think it's very good that the Reserve Bank is a full-service bank. So we have the monetary policy, we have financial stability, we have the prudential supervision, we have the macroprudential tools as well. I think that is good for a country like New Zealand to have that. I worked quite a lot on, because even in my previous role, we were working on financial stability. We were working very closely with the supervisory authority. So I feel very comfortable doing the work here. And I have great people working with me on these matters.
And I'm also interested in asking you about central bank digital currencies, or CBDCs. So I'm sure you're well aware the Reserve Bank's been working on a potential CBDC, but my understanding is no decisions have yet been taken on that. But the idea was that it could potentially be used by the general public as a new form of cash in addition to banknotes and coins. I'm curious on a couple of things here. Like, firstly, what use cases, if any, do you actually see for this type of retail CBDC? And in your previous role, were you involved in the work on the e-krona in Sweden?
Well, I was at the executive board, so all of these kind of questions posed by us. I think that we are still in a research and analysis phase in terms of CBDCs. I think it's important to look at it from very many different angles. I do want to stress that it is important to still have physical cash in the economy. It's for two primary reasons. One is crisis preparedness. Digital can be good in certain types of crisis, but you still need to have cash in circulation. And the other one is financial inclusion. It's not easy to use advanced digital internet solutions for some parts of households. So it's important that cash is available for households. So that's really, I really want to stress that. And that's also one of the things that we are working with.
And what about stable coins and other digital assets, and I guess any impact? I mean, they're obviously, stable coins are backed by liquid assets, maybe the US dollar. Do you have any concerns about these, I guess, as a threat to the New Zealand dollar, or, the potential impact on bond markets? And how important an option for financial resilience is cash?
Well, it's a good question, because it's one of the things that are being discussed a lot at international central bank meetings. We are following these developments. There are regulation coming in certain jurisdictions. So I think key point is that we are closely monitoring. We don't see an immediate threat, of course, to financial stability in New Zealand. But it's a question, it's a growing field, and it's important to be updated and keep vigilant.
Does New Zealand need regulation in this area, do you think, the area of cryptocurrencies and stable coins?
I don't want to comment on that quite yet, but it's one of those things that I think is something that we need to have good analysis and keep on working within that field and following international developments.
Okay, look, well, thanks so much for your time, Anna. We'll leave it there today. So that's Anna Breman, who is the Governor of the Reserve Bank of New Zealand. And I'm Gareth Vaughan from interest.co.nz with another episode of our Of Interest podcast.
Thank you so much.